this week, your pick of the week is ING Group, ticker symbol ING.
Hmm.
And is this a similar setup in that we're going to be selling options because we think that there might be a pullback?
Absolutely. And we can do it both ways, Sip. I mean, options are uberly flexible. So we can actually sell put options, we could even sell call options, and you would do those in different circumstances. Here, let me explain. First of all, Ing is a bank, right? It's originally a bank from Dutch. It's a European bank. And I think this is a good place for us to put our money as things get a little bit unsettling with interest rate drops. As you can see, Ing is in one of those patterns that we like where it's sideways choppy. So it's not really going anywhere. You wouldn't want to try to trade this directionally. Plus, there's some, gapping from the morning to the evening because the after hours traders are in different time zones. So they're moving the price of this in the afternoons, evenings, and even in the pre session in the morning. So, I don't want to trade it directionally. Instead, I want to do what we were talking about before. I want to set it up so I could sell option premium and have it expire worthless. Also, Ing, gives a very nice dividend. They always have positive earnings, as most banks do. So, I'm using one of my indicators that you can download. This one is called the Confirming Indicator MACD. It's set up such that we're using the fast MACD settings. These are the MACD settings from the folks over at the MACD think tank. That's a 6, a 19, and a 3, all exponential moving averages. You can see that right here in my settings. The only thing that I'm doing a little bit unique and my indicator allows you to do, whereas the standard MACD indicator does not, is I can choose what the MACD is calculated on. And I've chosen to have it calculated on volume weighted average price rather than just the closing. And so I get a little bit of volume validation in my arrows, in addition to the traditional MACD indications. So these might be a little bit different from a regular MACD or fast MACD. With all that said, I was looking at the signals that have come at each one of the bottoms and tops, and they're very close to helping us, get our best reward and minimize our risk. And so that's what we want to do. We could either, and one other thing I'll say about Ing is that uh, substitute options. I don't really find that there's any good substitute options in Ing. So you're going to have to do everything with the stock itself. So, when we identify a bottom, generally what we're going to do to sell premium, we have to set up what's called a covering position. So at a bottom, you would buy some of this stock and you would buy it in lots of 100 because options are sold in lots of 100 called contracts. So you would buy stock in 100 share increments. And then when you get to your top, and you don't even have to nail it perfectly, you just want to beat your kind of middle price target. But so long as you're kind of identifying a top, that's when we want to sell our call premium. And you can even buy your protective put that at that time. For a protective option, in this case, protective put, I'd go out about months, probably error to the 6-month side versus the 3-month side. I probably pick a price down here right below my break even price. And I would use that as protection. It'll be nice and cheap when you buy it up here at the top reversal. And then you just let time pass by, tick tock, tick tock. And as the time passes by, SIP, this thing is going to, the premium we sold is going to lose its value. You saw that curve we pulled up on Google. It loses its value exponentially. And at the same time, that protective option that is offering us protection if things go off the rails, it's also actually gaining value because we bought it the correct way. And so when our option finally expires worthless and we get to keep that money we made up front, we can then look for an opportunity to sell back that protection at a profit we don't need anymore. And then we can just repeat the cycle, pretty much create a monthly income out of owning the Ing stock. Now, on the flip side, no, one more thing. On the flip side, um, we're about to get to a top. We've already missed the bottom signal. So you can do the opposite, right? You could short this stock, which then allows us at the bottom reversals to sell put premium. It operates the same way, creating that monthly income. We would buy a protective call up here with a strike price of 18.50 or $19, 3 to 6 months out. And then we would just roll those out. And it acts just like the same thing as if we did it by buying the stock and selling calls. So you could do it either way. And so we'd probably be looking for that transaction next, SIP.
And a really phenomenal price point, right? Under $20 as a stock, which makes it a little bit easier to buy, you know, just having less money to get into the position. And then I'm seeing a lot of gaps, like gap ups and
Mhm.
gaps. Is that because it's mostly like a foreign company and that
Mhm.
it like things happen outside of US market hours?
Mhm. In this case, that's exactly the reason, and that's another reason why maybe I don't wanna, trade this directionally. I would rather trade ing by selling that time, because even with all these gaps happening, time is still passing by reliably. Like I said, 60 seconds in a minute, 60 minutes in an hour. That's not changing even though ing is gapping. So I don't want to trade the gaps. I don't want to trade the directions. I want to set myself up to watch that timer just tick down. And every time the timer ticks down, I want to do it again and do it again and just keep creating kind of an income. I bet if you sized this right, these positions right, you could easily make 10% on your invested capital on ing.